Hi, everyone, and welcome to Behind the Numbers. My name is Dave Bookbinder. Thanks again for joining us at the show where we dig deeper to understand what really matters most in business. We appreciate you following this program. I know we're going to have an interesting conversation today because my guest is Neil Cataldi, who's Chief Investment Officer at Starboard Advisors. Neil, welcome to Behind the Numbers.
Thanks, Dave. Happy to be here.
It's a pleasure to have you, and I know before you say a word that you have to give a compliance disclosure statement. So I'm going to give you the floor and allow you to state that so we can move on here.
Thanks. Yeah. So Dave Bookbinder is not a client of Starboard Advisors, and there is no exchange of compensation related to the podcast today.
That is absolutely true. Neil did not even take me out to lunch. Can you believe that? So, and you're here anyway. So thanks for joining us, Neil. Now that you've gotten that piece out of the way, tell the audience a little bit about who you are and what is Starboard Advisors.
Sure. So I'm Neil Cataldi. I'm Chief Investment Officer at Starboard Advisors. We are a registered investment advisor, but we position ourselves really as a multifamily office in that we work primarily with ultra high net worth individuals and families. I think in its simplest form, we are a single point of accountability for our families, really their trusted person. Our goal is to be this fiduciary and the first phone call, whether it's good news or bad news. What's underneath that sort of simplicity is a sophisticated, sometimes overlapping group of individuals who are really dedicated to just serving families. We provide a number of services, which is typically a heavy dose of investment management, tax and estate planning, education on the psychology of money across our families, and oftentimes really just being available to address an area of need, whether it's a family that needs help selling their business, gifting shares, their business to the next generation, trustees for their children to guide them as they inherit the wealth. The list goes on. My position within the firm is really to work with the families primarily on the investment side, because that's my area of expertise. I spend a majority of my time analyzing the markets, building out our asset allocation models, and choosing our managers and investment vehicles.
Thank you for sharing that. We've got a lot to unpack here because there's several different themes here in regard to family businesses, entrepreneurship, and certainly wealth management. But let's start at the top, Neil. For folks who are listening to the program who aren't familiar with a family office is, why don't you help define that for us?
Yeah, so family office is a popular term nowadays, I think, in the financial industry, right, Dave? In general, I would say a family office or family offices are dedicated people hired by a family or a family tree, if you will. And they have employees that are really just dedicated to work for them. I typically think about family offices requiring a net worth of 500 million to say $1 billion. Those single family offices run all of their financial affairs. They provide counsel. They often have, personal assistants, administrative staff. They're truly the general contractor for that family, and all of the family needs are met. Um, we noticed at Starboard that high net worth and ultra high net worth individuals, more and more people today are selling businesses for 25 to $50 million. That profile of a family of an individual wants a similarly dedicated team, but they're willing to share it across 10, 20, 30 families, and then of course share the cost. So um, that's really where we come in. And again, it's investment strategy, but it's also the estate planning, the tax strategy, it's the overall fiduciary responsibilities. And I think that's really where we differentiate ourselves from the more commonly thought of, financial advisor, the large banks. Um,
Yeah, Neil, when does somebody need to start thinking about having a family office? Is it after they've done an exit event, or is it sometime prior to an exit? Where does the family office fit in the whole continuum of an entrepreneur's thought process?
Yeah, that's a good question, and I think you can certainly attest to this too, right? With what you do, but um, uh, typically, what we find one thing that people are doing wrong is that they're waiting too long for that planning component.
Mm.
Um, so, if somebody's going to sell their business, it's ideal for us to come into the picture and start having conversations a year or two before that happens. Once they've sold the business and they have the money per se, um, they may have missed an opportunity, right? Maybe the entity that the business was held in wasn't most efficient for tax purposes, as an example. Um, but yeah, it's best to come in, earlier rather than later.
Oh, you're absolutely right. I can certainly attest to that. In
Yeah.
my world, in the valuation space, a lot of times people come to me and they ask me about evaluation analysis because they're thinking of selling. And the thing that I always advise is that the exit transaction, while it is an event, it's more of a process, and you've got to get yourself sale ready. Certainly, circumstances certainly arise where maybe a business owner gets an offer out of the blue, or someone dies, or there's a business divorce, and now the exit process has to be accelerated unexpectedly. But all other things equal, a longer horizon and planning is certainly the way to go for sure. Excuse me. So I want to talk a little bit about something you mentioned when you were talking about the things that you do, and you mentioned something called the psychology of money. And I think that's fascinating from so many different levels when I think about younger colleagues and how they think about money, how kids think about money, and certainly how business owners think about valuation and game money, because a lot of times in their minds, the most important thing is to get the most value in the exit. But the reality is they don't necessarily need to get the highest valuation. You need to get a proper valuation and have someone like yourself manage the proceeds. But I'm going to let you answer the question, which is talk to us a little bit about what is the psychology of money.
Yeah, so there's actually a great book on this that is called The Psychology of Money, and if people want to dive in deeper to it, I certainly recommend that book. It's by an author called Morgan Housel. But when we think about the psychology of money, one of the things we do with our clients that I think we're really good at is helping them figure out their intent. So you have this money. What do you want to do with it? It's difficult to measure over a lifetime. It's certainly a moving target, right? I think when we're young, we think about money differently than when we're older, and when we don't have money, we think about money differently than when we do have money. So for the families we work with, um, it's complicated. So you have this money now. Do you want to give your money away? If so, do you want to give it to your kids? Do you want to give it to a charitable organization? Is that an entity that you created that do you want to build something around philanthropy, or do you just want to give it to something that already exists? um, how do you think about the next generation, your children? How can you pass on this wealth, and how involved do they want to be? These are all sort of things that we think about, and I think that a lot of times people view financial planning as a science, but in this respect, it's much more of an art. Every person, every family is different. Some want to spend it all before they pass. Some want to plan and pass it down. There's a lot of gray area in between. So the science is certainly like figuring out investments, matching it with risk. The art side is figuring out this emotional piece and really the psychology around, okay, you have this wealth. How do you maintain it? What do you want to do with it? Um, and then, you know, before I worked at Starboard, I spent 15 years with a single family in the Philadelphia area, and one of the things that was particularly fascinating about that experience was uh, first generation sort of passing down to second, and helping that second generation understand what it means to have this money and what to do with it. And there's a lot of psychological complexity around the generational transition.
Yeah, let me talk to you a little bit more about the generational transition because in our work day to day, we're working with entrepreneurs and business owners, and the strategy of what happens with the business. Is it going to go to the kids? Do the kids even want to be involved in the business? Get your perspective on what you've seen around some of the challenges with a business owner contemplating an exit and whether or not family members are able to actually, carry the water going forward and maintain that legacy.
I think the hard part is figuring out what the next generation is passionate about, and not sort of pushing them into a job or a role or responsibility that they don't necessarily want. Um, and because when you do that, um, the dynamics change, right? So on the wealth side of the equation, I mean, certainly the earlier you're able to start educating them and getting them involved in the process, the better off you are down the line. And it's a fine balance, because I think a lot of times entrepreneurs who start these businesses and create a significant amount of wealth, they've taken a lot of risk to get there. And they've oftentimes, they've done it themselves, and they're reluctant to sort of give away control. Um, but that's where, when you can bring in the next generation and you can help them get experience, whether it's operationally speaking with the company or whether it's, on the wealth side, to understand the money and investments and how it all works. The sooner you bring them in, the easier that transition is, even if it means that they might not be involved. At least they've learned and they've figured out more about what it is that they want to do or where they want to be, and how they want to do it.
Yeah, and how about the business owner? Most of my investment banking friends tell me that the one of the main reasons why sale transactions don't happen is because the entrepreneurs tend to think, I don't know what I'm going to do with my life after I sell my business. And certainly my spouse doesn't want me at home all the time. We hear that all the time. Um, what's been your experience in working with these business owners, entrepreneurs who've now exited their business and now they're more wearing the hat of an investor?
Yeah, interesting question. I mean, I think a lot of times they struggle with just walking away completely from responsibility and what motivated them on a daily basis, right? People that start businesses, are successful, accumulate wealth, I mean, they're very passionate about what they're doing, and if they've done it well, which in most cases they are, because that's why we're working with them, it's hard to take that away. So a lot of times we find that those individuals, take a little break, and then they're quickly getting involved in something else, um, to sort of satisfy the I don't know, the itch per se, if you will. Um, it's particularly interesting on the investment side, where I sort of exist a little bit more, in the sense that, and I touched on this before, is that they're taking so much risk in their life by starting a business and getting to where they are, that when they, have that liquidity event and then they have this capital, I think oftentimes they want to continue to have risk, right? Continue to grow it. And so, I mentioned this word intent. It's a sensitive area where we come in and we try and help them sort of understand, what their longer term goals are, and then sort of build a pathway that allows them to achieve that goal without taking too much risk and without, going down the wrong path per se. Um, but but there's definitely a place for quite a bit of help in there, and I think that's the place where we fit. We want to be that first phone call. We want to be the person that's that's helping them transition.
You hit on something with regard to the next thing in the entrepreneur's life. I just want to expound on that. I had our managing partner at Hafley Flanagan, Jim Rogers, on my show a little while ago, talking about that very topic, and he mentioned and emphasized that a lot of times business owners lose sight of the fact that once they've done the exit and they now have capital, there is and there are other opportunities for them to explore, and that's exactly what they do. So don't lose sight of that if you're a business owner and you're thinking, "What am I going to do next?" There is a next thing for you out there. Neil, I want to ask you to put on your RIA, your registered investment advisor hat. I want to talk a little bit about investing, um,
Sure.
both with regard to maybe the family office, but maybe even just bigger picture for, we'll call it the general populace. What are some of the investment themes and strategies that you like to employ for the long haul? Recognizing I am not asking you to reveal any secret sauce or anything that's going to have you step in a compliance cow chip here.
Well, look, I mean, we do a lot in this area for our clients. We're certainly building portfolios. Trying to identify uh, appropriate levels of risk tolerance and matching, that tolerance with what's an appropriate investment allocation. Um, I spend a lot of my time in this area looking at the markets and trying to sort of find opportunities. I think people love to talk about, the shorter term. But what's also really interesting is to think about like the bigger picture and longer term sort of cycles and changes in those cycles. So we're helping people with 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 the short and the long term. And when I say longer term, I think that can mean uh, changes in like interest rate cycles, right? Which is something that we're all experiencing right now. The Federal Reserve recently cut interest rates last month for the first time in years. And so that type of cycle shift is very significant. And likewise, when they started raising rates a number of years ago, that was a pretty significant 180. And we want to help clients um, navigate those types of transitions, um, while at the same time, just having them sort of maintain the portfolio that they have, while understanding that volatility happens. Um, but oftentimes volatility is opportunity. Um, and so I would say, I mean, would you like me to touch on some other longer term strategies, or do you want me to get specific with how we build out portfolios?
I'm going to let you take it wherever you want, but would definitely appreciate you sharing some of the bigger picture strategies.
Yeah, sure. I mean, from a portfolio basis, I mean, we pretty much keep things fairly simple. There's a reason that ETFs are popular today. They are a very cheap and efficient way to get market exposure.
Yeah, an
Uh,
ETF is an exchange traded fund. It operates like a mutual fund, but trades like a stock, right?
yes, great explanation. Yeah. And so, a lot of times, our general philosophy around fees is to limit fees as much as possible for our families and clients. So we're always looking at that, and there's plenty of ways in the markets today to get different types of exposure without having to pay very much for it. Um, but again, I think to go to like these longer term cycles, I mean, one of the things that jumps out to me right now, um, you know, if I'm wearing my CIO hat, is the concentration across the markets. So an incredible amount of wealth has been accumulated by investors over the past, 5 to 10 years in mega cap technology names, especially the past
Yeah.
2 to 3 years. There's a term that's being used, the Magnificent Seven, that refers to these mega cap tech companies like Microsoft, Google, Nvidia. And what we often find is that um, many of our clients own these stocks or come to us having owned them, and they've fortunately made a lot of money in them. But what's interesting to me is that because of the rise in this small subset of companies, there's an incredible amount of concentration in the market today. It's historic. If you look at that group across the S&P 500, you've got like in those seven names, it's like 30% of the index today, which is greater concentration than we've really ever seen. And so I look for outlier types of statistics and things such as that, and like to think about at least how market dynamics can change. And as those sort of bigger shifts happen over time, how can we position clients to benefit, right? And in no way is that saying that that leadership group won't continue to be leaders. But there's a law of numbers at play here, and so we're always sort of looking for where the opportunities may exist, and for where historical sort of outlier events may be occurring.
Yeah, good point. I was actually talking to somebody not too long ago and then he was telling me about how thrilled he was with his S&P 500 index fund, and he was totally unaware of the Magnificent Seven effect and what that
Mhm.
impact has been on the overall performance of the index. So thanks for sharing that.
Yeah, yeah.
I want to talk a little bit about what business owners are doing right, doing wrong. You kind of touched on it at the top of the program when we talked about planning and how most business owners can certainly do a better job thinking about long term planning. Um, Share, if you would, maybe a couple of horror stories or events that you want to make sure that folks who are listening can avoid and do better, and maybe in that maybe call out some of the things that you've seen where people are doing it really well.
Yeah. So, I mean, again, I think we talked about planning. I think what people do wrong is they wait too long for planning. And there are some horror stories um, around what can happen when you don't plan effectively, and sort of the cost of not. So getting that head start really, I think, is necessary, and it's you know we often see these, I come across this regularly, is where the business owner is so caught up in the business that they can't think about, three or four or five steps ahead when they're getting to a place where they'd want to work with us, right? They're in the weeds of the operations of the business, and they're thinking about maybe they would sell it, or they're working with you to go through evaluation analysis and even try and figure out what the business is worth. The idea of having somebody else in the mix as in an advisory position, it just seems like it's really far away to them, right? um, but really, what we're trying to do is we hear people say they're holistic oftentimes, but we don't really see that, right? So like, we're trying to be the person that can show up at your tax meetings. We're trying to be the link between estate attorneys and taxation and advisory. We're meeting with your kids, your next generation, to help with that education piece. And so, I would say what people are doing right is when they're seeing, the bigger picture, and they're able to start to build that foundation around themselves at an earlier time.
Yeah, when you talk about bigger picture, business owners often have we'll call it a cadre of advisors, accountants, lawyers, wealth managers, etc. Who do you want to have at the table with you when you're talking to the business owners and you're working with them to help them build out these strategies for the long haul?
The problem is that they don't all talk to each other, right?
Yeah,
So
right.
that's the problem. It's that everybody has somebody, but there's no effective way for them to communicate so that it's efficient. And that's probably the one of the biggest problems we're trying to solve for our families. there has to be communication throughout that group. So it's certainly the people that are managing your investments. It's certainly the people that are, doing your taxes, and it's certainly the people that are working for you on the estate side. Um, with that type of planning. But in many cases, there's plenty of other inputs to that sort of equation. And so figuring out a way to get them to all interact well is a challenge. But I think that's certainly where we come in.
Yeah, so you have no problem playing quarterback and making sure everybody's on the same page?
Yeah, that. I mean, the analogy I use all the time is general contractor.
Okay.
And I think that that's easy for people to understand. Um, and in reality, these people, the typical profile of family or individual we work with, I mean, they don't want to be tying all those people together anymore. It's complicated, and it's often a headache. So if they can have somebody that sits in the middle, and to use your term, quarterback at all, it's great. There's definitely
Oh
value
yeah,
there.
they've got plenty to do just in running their business and running their affairs and now running their investments in a family office situation. They don't need to be chasing down their advisors.
Yeah.
You know, there are so many more things I would love to chat with you about, but unfortunately, time's a limiting factor here. So we're gonna have to wrap. But before we do, tell the audience how they can connect with you if they want to learn more about you or if they want to work with you.
Sure. So Starboard Advisors can be found on the web at starboardadvisorsllc.com. And if anyone would like to contact me directly, my email is Neil, Neil, at starboardadvisorsllc.com.
That's awesome. Neil, thanks so much for joining us today and Behind the Numbers.
Dave, thanks for having me.
It's been a pleasure. We've been talking with Neil Cataldi from Starboard Advisors. And my name is Dave Bookbinder, and I'm known as a valuation expert. If you're a business owner, you've enjoyed this program, and you don't know what your business is worth, we should probably have a conversation. So certainly feel free to reach out to me on LinkedIn. I'm always happy to have a conversation. Can't thank you folks enough for out there for watching and listening and supporting this program. Really, really appreciate it. That's all we have for today. We'll see you next week on Behind the Numbers, gang. Take care.